Hey folks, this is Jeff coming to you from Florida. It is Monday, May the 25th, Memorial Day. This is my second video of the ETFs that I'm long in. And a few of the ETFs will show up that I'm probably not going to be long in because they're like 2x ETFs on some stocks that I think will probably fade. I will identify those for you. I'm in them now, but I don't plan on being in them for much longer, especially since I think the stocks that they they represent are going to fade pretty soon. So bear with me. It'll be a long video. I'll publish it also on YouTube. Thanks. Hey folks, good afternoon. This is Jeff coming to you from Florida. It is Monday, Memorial Day, May the 25th. And as promised, this is my second video of the day. These are the ETFs that I'm long in that I have in my retirement accounts. All right, so let's get right to it. First on the list is BATT, the Amplified Lithium and Battery Technology ETF. I found that this is just much easier to invest in than the stocks that comprise it because some of them run hot, some of them run cold. They can never seem to get their act together and coordinate. But the ETF has done really well over the past 12 months. It's up 92%. Year to date, it's up 21%. I like that, right? Next, Breakwave Tankers, BWET. This has just been on fire this year, on fire. And I got into it early in January. So listen, since January, past 3 months, it's up 257%. I expect it to continue to go up, especially with tensions unwinding in the Middle East. A lot of shipping will pick up. All right. Next is Chippy, CHPY. All right. For those of you who are not familiar with Chippy, Chippy is based on a lot of semiconductor stocks, and they have all been doing really well. So, and not only that, but Chippy pays an extraordinary dividend, 31.9%. And as you can see here, there's been no NAV erosion in Chippy, right? None whatsoever. It just keeps going up as the semiconductor stocks go up, pays 31% dividend, and it pays weekly. Now, you have to own the stock by the end of the day on Tuesday because they declared the dividend on Wednesday and you get your payment on Thursday. All right. So Chippy is great and no NAV erosion and a great yield, 32%. Next on my list is CMDY, which I love. It's the Bloomberg Roll Select Commodity. All right. Commodities have been hot, all commodities, you name it. All right. There's just a shortage of commodities around the world. I mean, it's not going to set the world on fire. It has a low ATR of 1.38%, which means the percentage that it averages, that it varies on average each day. Right, up 22% for the year, up 26% year to date. Next is DIVB. I like this a lot. The U.S. Dividend and Buyback ETF. It has been a consistent performer year after year. It's not going to set the world on fire. 26% over the last year, 14% year to date. All right. Last month alone, it was 8%. All right. So looks great. Next, ENFR, which is the Alerian Energy Infrastructure ETF. Energy infrastructure is just a hot topic these days. All the energy companies are doing well. Energy infrastructure is doing well. So again, it's not going to set the world on fire, but it has been very consistent. 29% last year, 28% year to date. Next on my list is ENOR. United States is not the only country that's doing well. South Korea is doing well. China is doing well. Norway is doing well. Look at Norway. This is based on a bunch of stocks in Norway. It is up 39% over the past 12 months. Year to date, 31%. I like it. It's got a high RS rating. All the moving averages are in sync. They're all moving up together. EWI, here we go. South Korea, right? You can see these moving averages. Look at blue, 200-day moving up, green, 50-day, red, 21-day. They're all moving up. This one's doing well. It's 99 RS rating. You can't get any higher in terms of relative strength. It was up 212% last year. Year to date, 87%. FITE, interesting. This is the Kensho Future Security ETF, right? This one's doing really well, up 57% over the past 12 months, up 26% year to date. Right? Uh, this has been a nice, long-term, consistent performer. I mean, look at this. Look at that growth. It just keeps going up, right? You want to put your money, someplace that's going to grow and have a low ATR at the same time, 1.97%. So on average, it only varies 1.97% per day in terms of value, right? Uh, Here's one of my favorites, GGLL. Everyone knows that I love Google. I think Google's the best stock on the planet. Uh, and and it's a good entry point right now. GGLL is the Google 2X ETF. So I have Google stock. I also have Google 2X, and the next stock I'm going to talk about, GOOW, I own a lot of that. Okay, but this is Google's 2X, and Google was up to like $404 a share, literally like 10 days ago. Now it's at like 385. So there's a little dip right now. It would make a great entry point. As a matter of fact, I may buy some more. I may buy some more on Monday. All right, of GGLL. Of course, if you tune into my daily, my Man versus Market dailies at 4:30 Eastern Time every day, you'll know that I'm very heavily into GOOW. I have a lot of GOOW shares to the tune of I get like literally $5,000 in dividends every month just off of my GOOW shares, and there's no NAV erosion. It moves up and down with the price of Google, and it only came online last August, and I bought in early September. And it was up and it was down. This was when Google had dropped from like $350 a share down to 275. And I went in and I bought a lot more GOOW at 275. And you can see Google has run back up over 400. And now Google's down to 385. So Gal followed it right down. So it's a great entry point. This is nice. You have to own the stock by the end of the day on Friday. They declare their dividend every Monday, and you get your payment on Tuesday every week. It's been great. All right. Next, this is the one. This is one of the two ETFs that I may be getting rid of. All right, uh, because it's based on Intel, and I don't know that Intel really has the chops to keep up the kind of growth that it has been. Uh, as you know, if you have watched my videos, I did publish a video on Saturday that talked about the four top chip stocks, and I rated them in terms of where my money will go in the future. Clearly, NVIDIA is number one. My second one was AMD. Third was Intel, and fourth was Qualcomm. That may be reversed. Intel may have been fourth, and Qualcomm may have been third. But my money for the balance of 2026 will be going into NVIDIA and AMD. From their sales estimates, and they have been on the mark in terms of meeting their quarterly estimates. Uh, I would just say that NVIDIA and AMD have the best opportunities to rise, right? The most, right, out of the four. Next is ITAN, right? ITAN, you can tell from this chart here. Look at this chart over the years. It's just been a consistent performer. That's daily. Let's take a look at the weekly. Weekly, it's even more impressive. This is just great. I mean, I'll go back. Literally, since September of 22, it has just been moving up consistently. It's not going to set the world on fire. 34% over the past 12 months, 11% year to date, but heck, I'm happy with 34% in a year. Next is Crane Shares, KSTR. It says based on a bunch of companies in South Korea. All right. It's done. Let's go back to the daily. It's been doing really well this year. Look at, you can see, and it's been very consistent. Literally, you can go back to what, October of what, year before last. It's just done great, right? And it's risen really nicely. 98 RSI rating, way above all three moving averages, and all the moving averages are in sync. They're all moving up. 21 day, 50 day, 200 day. You can see them all moving up. Right? Here's another one I may not be hanging on to. Lint is based on Intel also. It's a 2x Intel. Uh, we'll see how Intel goes, whether I stay in Lint or not. LRNZ, another great ETF. Not going to set the world on fire again. 33% over the past 12 months, year to date, 13%. Next, MLPX. I like MLPX. It's been a really consistent performer over the years. It did have a consolidation period between October and February, right? It just bounced around between like $63 share and 57.66. You can see it. And then in the beginning of January, boom, took off, had a little dip, came right back. All right. So it looks really good. All right. 28% over the past year, 27% year to date. Next, PIT, which is the Van Eck Commodity Strategy ETF. It has just been on fire, since literally beginning of the year. All right, it's doing great. 52% for the past year, 42% year to date. It's cooled down a little bit, but still, I expect it to at least do 30 to 35% this year. Hey, I'm happy with 30, 35%. All right. Next, if you know me, if you tune into any of my dailies, you'll know that I love Rocket Lab. I, I've got a lot of conviction to Rocket Lab long term. This is the Rocket Lab 2X ETF, and it has been delivering for me. Rocket Lab has been volatile over the past year, but the bottom line is it's up. All right, it's up substantially. This is 2X. So over the past year, it's up 752%. Year to date, 134%. The trend is your friend. You can't argue with the returns. SOXQ, another one that's been great. This is the Invesco Semiconductor ETF. It's up 155% over the last 12 months, 72% year to date. Next, SPAN, which is the Theme Cybersecurity ETF. So it invests in cybersecurity companies, right? It had a big drop, all right, at the beginning of the year, all right, but it has recovered very nicely. If you look over the last year, technically it's only done 22%. But listen, I'm happy. I'm happy with any ETF that does more than 15 or 18% a year. And I like where this is going right now because the cybersecurity companies have really picked up the head of steam over the past 8 to 10 weeks. So I think it's a good investment. I do, right? That's not investment advice. I don't give investment advice. These are just my opinions, right? Next is TQQQ. Everyone knows about the Qs. Well, this is TQQQ. All right. Last year alone, up 128%. Year to date, up 47%. Looks great. This past week it was up 3.3%. Last month, 30%, up 30% in 1 month. Next is UFO. Everyone knows the space stocks. SpaceX is going to go public. We have Rocket Lab. We have what's the other one? SATS, the satellite company. There's a bunch of satellite space type companies. SpaceX will be going public here next month. So this one's been doing great. 154% over the last year, 60% year to date. The past month alone, it's been up 14%. So UFO is great. Then there's also UFOX, which I really like. All right, that's another space stock or space ETF. I figured I'd just try them both, see which one outperforms the other. Right. It's been up 115% last year. It's not as volatile as UFO. Let's just go back to UFO. All right. So here's UFO, UFOX. All right. A little bit smoother. Okay. A little bit smoother. Just probably the way they structure. But it's been up 115% year to date, 55% close to what UFO has done. All right. and it was up substantially more just in the past 30 days, right? Next is VRAI. VRAI is a great ETF. It's produced well over the years, 25% last 12 months, 21% year to date. So we may see a really nice year. And the last two are, if you listen to my 72 stocks video that I did earlier, this 72 stocks that I'm in, one of those is VRT. Well, and I have a big conviction of VRT. So this is the VRT 2X, right? I wish I had bought this a year ago. Look at this, 517% over the past 12 months. Now, the beauty is VRT is coming out of a big dip right now. All right. So this is a really good time to get in. All right. A really good time. This is a great entry point. Uh, let's turn the chart into a mountain type chart. You'll see, you know, it had a big run up. It dropped down and it's coming back very nicely over the past 3 or 4 days. So this is a good stock to get in, a good entry point right now also for VRTL. Right. And then finally, VSMV. I really like this ETF. It's another one that's just a consistent performer. It's not going to set the world on fire. 25% over the past 12 months. It's been 13% year to date, which is where it should be, So we're on track for another 25% year. I wish everything I did was 25%. It would make life very easy. But you have to be diversified. So we'll see how it goes. I like it. Last 3 months, it was up 4.3%. Last month alone, 4%. Right. So those are it. There's 27 ETFs in total. Two are based on Intel, which I may be scaling back on or getting rid of, but the remaining 25 just look great for sure. We'll see if Intel can continue its rise. I'm not going to keep my fingers crossed because hope doesn't make a stock go up. So we'll see what happens. But that's it. Good luck. I will post all of the tickers in the comments section on I'll do it. I'll post it in the comments section on TikTok and on YouTube because I'm publishing these videos on YouTube also, in addition to TikTok. All right, that's great. Thanks everyone. Have a great balance of your Memorial Day.